We're turning our attention to some smaller stocks now, and I'm joined by Anthony Clark, small caps analyst at Vunani Securities. Anthony, today we saw that cautionary announcement coming out for Invector, not a common thing for Invector that we've seen in the past. The acquisitions up until now have always been kind of below the radar. Are you expecting something big to come here?
Yeah, good afternoon. I think the answer is yes. Under JSE rules, normally when a company issues a cautionary, it can relate to at least a deal that's 10% of their market cap. You know, Invector's market cap is 6 billion rand. So in theory, it could be an extremely large deal. But as you say, Invector hardly ever issues a cautionary. They're very, very rare. And most of the deals they have done in the last few years in following this company have been below the radar screen. So the fact it has issued a cautionary leads me to believe that perhaps a large deal is coming. And I think it could be in either a South American or a Southeast Asian country.
Now, we have actually seen the share price increase quite substantially over the last couple of weeks. We've also seen the chairman, Chris increase his holding into that company of more than 2.8 million shares of Invector. Has that also giving you away some of this positive news for the company?
Yes, Invector is a bellwether industrial stock, so a number of positive factors going for it. Recent results were quite positive. They increased their dividend. They sit on 641 million rand of net cash. The underlying economy, even though it's a bit dour, remains fairly stable for Invector. And now you come out with the chairman buying 220 million rands worth of stock to add to his already majority stake. And the cautionary, it points to a number of positive factors, leading Invector, for me, to keep my buy recommendation on the stock.
Now let's turn our attention to Afrimat. We've seen Afrimat also have a cautionary on them at the moment, but it was their AGM yesterday. Did Andries van Heerden let you into any direction where you could gain more information on what this cautionary might be about?
The answer is no. Given governance these days, CEOs are very reluctant to give you anything. However, in the small cap world where I specialize, there's ways and means to get information. And if you look at what's going on in the marketplace, one of Afrimat's smaller competitors, Infrasource, is currently under cautionary. A fit between Infrasource with a market cap of 126 million rand and Afrimat, which is about 8 times the size, would be a fantastic fit. Afrimat is cash flush, it has a national footprint, and Infrasource has some very strategic assets in parts of the country where Afrimat would like to be. So I'm speculating that an Afrimat-Infrasource deal is where we're going. But Andries van Heerden, the CEO, wouldn't let on, but I think news will be coming in the next 30 days because that cautionary will be renewed.
What were some of the key points that you took from that AGM yesterday?
I think the key thing that he mentioned is that Afrimat's core aggregates business remains in a very competitive environment. You know, we all know the construction market in this country is it's down quite sharply. But Afrimat is quite strategic. It spent the last few years building up some very nice acquisitions outside of a construction materials business. It's moved into industrial minerals. It recently bought a clinker operation for the cement sector. So the 2 acquisitions it's made in Glen Douglas and in clinker will insulate the core aggregates division until the economy recovers. And that, combined with a very low level of gearing, only 8%, and a strong cash flow, leads me to believe that Afrimat, at about 6 rand, again this morning, is a buy.
Now, Afgri and Senvest yesterday also announced that they are going to merge their retail divisions into a new division called Newco. The Sense and the retail, or the announcement made by Senvest, didn't give away a lot of information on this. But if we look at that numbers, who's going to profit more from this deal?
Yeah, I spoke to Senvest yesterday because I cover the agricultural sector quite closely. The main winner in this deal, I believe, is going to be Senvest. If you look at the underlying profitability of the retail operations between Senvest and Afgri, the Senvest operations make double the profit and double the margin that the Afgri operations do. We must consider going forward that this new merger is only in the retail operations, the farm shops, the large stores, etc., etc. The underlying mechanization and agricultural equipment, where they make a lot of money, has been specifically excluded. So this joint venture is initially worth 880 million rand, and each party has 50-50. And I'm on record saying yesterday that I believe that in due course, Afgri will exit its retail operations, and Senvest would then be the logical buyer of his operation. But we mustn't forget that a combination of these 2 entities will dominate what would be called the Old Transvaal area and the Northwest Free State and Northern Cape areas. It's a huge agricultural titan that's been created, and as such, I'm in favor of a deal.
Thank you for a very interesting look at those 3 companies and those tips that we might find very useful in the market. That was Anthony Clark, small caps analyst at Vunani Securities.